Pete, welcome back. It's another fantastic day to be speaking to you here in Sydney. It's the final show on our Around the Market segment that's going to play out in XM. But and before we get into it, guys, it's been an exceptional year for the US dollar. It's defied all the doom and gloom predictions. It's gained 10% against the yen. The resurgence of inflation has been a regular story we've talked about here in the studio all year. Yep. We've seen it hasn't changed. We've got a continuing story there. We've got central banks hitting the brakes. We've got this theme that looks like it'll play out into next year. 5 of the banks met last week. You can give me an update on that in a minute. And I think we want to really hear about the Fed, the tightening situation there, the global growth perspective. And hey, you know, have we had a Santa rally? Have we not had a Santa rally? And what will happen in politics as we kind of look through the lens with Manchin kind of taking the knife to Biden's rebuild American program. So, the French are kind of into their midterms as well. The French are kind of, you know, I guess, swinging the bat at the moment against UK listed equities and retail trade. We're seeing a little bit of interesting politic playing out there through some of the boardrooms of places like Shell, Ryanair. And so, yeah, I think we've had a big year. There's another one to come, and there's plenty to talk about, Pete. But
absolutely.
There's the intro, there's the wrap. Give me 5 seconds on where we're at today from an XM perspective.
Well, I think, Will, you know, looking at that year in perspective, it's been such a volatile time that traders have rubbed their hands with glee. It's been extraordinary. We've seen volatility, and I think that volatility will remain in 22. So there's the good news story. Traders are, I think, enjoying. They've seen dramatic moves across currencies, indices, and commodities. So there's been no losers. Many people have done extraordinarily well. And I think that momentum will continue over the next 12 months.
Momentum, data and trade, there's the signal that matters. If we look at the major currencies and their performance on screen at the moment, we've got the year-to-date chart, which suggests that the US dollar and Japan seems to be the big play.
Absolutely. You've seen that dramatic move as far as yen. You've seen a huge move as far as US dollar index. Now to consider, we've got no chance as far as rate rises in Japan, and we've got 8 being tipped as far as America, the US and the Fed, 3 for 22, 3 for 23 and 2 for 24, take us up to 8. I think we'll map out at about 2.1%. So there's really momentum building across that bond play. We've got taper coming off the table, and it's been demonstrated as far as what's going on with the currencies that don't raise rates and the currencies that do.
Well, let's take a quick look at the guys in the red. I mean, the guys in the green speak for themselves. They've clearly had some positive performance, but the guys in the red, the euro versus the USD, I mean, that's a shocker.
Absolutely. I mean, and that really has been a dramatic move, but more importantly, imagine how many, you know, as far as the bips, what you would have made as far as a trader. Just looking at technical analysis, the markets never sleep. They're 24 hours a day, and traders all across the world, across our platform, have, I think, had the opportunity over this last 12 months to be really engaged. King dollar, sell the euro, and you'd be sitting now on a very easy beach for Christmas.
We'll come to that. We'll talk a bit about property, but I want to talk a little bit later in the show, but I want to talk about the Australian and the USD. I mean, I don't understand why we're so negative against the US.
The US really, we've got the China proxy as well, but the other side is we didn't see a rate rise. There was no chance of that, and the US went to the races. So I think that momentum and King dollar really attracts all of the risk. So there was a safe haven. Gold didn't move. Dollar traded heavily up. Aussie dollar was a small currency in comparison to the size as far as economic firepower of the US. We had a peak during the year nearly at 80, and we were under 70 only a matter of a couple of days ago. I think 2 weeks back, 69.9 something. So that just demonstrates huge swings and great opportunity again.
All right, well there's the major currency charts on screen for the moment. You can see the winners and losers, they're pretty clearly defined. Taking a quick look at the US economy, it's firing on all cylinders. You touched on that, a couple of reasons for it. Why?
Inflation has been a very strong move as far as that whole stimulus-led recovery. The retail sales have been very strong. People are buying, not even going to shops and buying online, so behaviours are changing. And the other side, and that'll be interesting to hear from a real estate perspective what happens to these buildings, because no one may be in them. I was just at David Jones and they're turning that one. I had to go and buy some perfume, and straight across the road, and you're going to put $20 million apartments in the famous David Jones shopping complex in Sydney. So that really demonstrates, I think, the use of real estate and what we've seen as far as transition and you're looking at the other side as far as strong domestic demand in the States, big push to the upside, and all of those are really being felt across every component of its, I think, its economy.
So consumption, tight labour market, inflation.
Yeah, very much so, and that's been a war for talent also, and wage rises, and people have got a map to inflation. If inflation, the inflation story, if you use 1980 metrics, we'd be running at 15% in the States. So that really puts a lot of hurt to everyone on Main Street.
And then it's a comparison. All right, last chart for the day before we change it up. Dollar index chart. This is a 12-month chart. Look, I think the picture tells the story. If you had a bought in May, you'd be sitting pretty in December, and that would have been your, effectively a 6-month standard rally for you.
Yeah, well, that's right. And really, when you're thinking that, just dramatic moves and what we've seen as far as that across that 12-month window. So really, traders again against the euro. It's just an enormous, and that dollar index, 61% is euro weighted as far as that index. So the king dollar has been the star performer, and I think that will continue over the next probably 6 to 12 months.
Well, there's the XM update. There are the signals that matter. And last question for you, Pete, before we transition. But what is the next 3 weeks look like? What do they look like to you? What signals should be people watching while they're sitting there unwrapping their presents? And let's just forecast through to say the 3rd of January, first week in January. What are you thinking?
You either do one of two things. You close down your trading and don't trade over the next 2 weeks, and just have a break and enjoy, or you identify what markets are moving, and they've certainly moved this week. We've seen big swings on equity markets, so I won't be surprised if you see something dramatic happen over that period. Keep an eye on Bitcoin, of course, and the whole ebb and flow as far as the global economy. So if you're going to trade, keep your stop losses closely monitored, and keep your hands firmly on the wheel, because I think that there's a dollar to be made.
All right, Pete. Well, let's invite our guest, Mr. Glenn Farrar, into the studio, and we'll come back to that shortly.
Absolutely, Will.
Well, welcome, Glenn. We've been chatting the last few minutes about signals that matter, and I think in bringing you to the show today, we're talking about a subject that's dear to most people's heart, and that's property. Certainly here in Australia, it's a big thing. Mate, talk us through it, where you're at, and what's been happening in your world in the last couple of weeks leading into Christmas.
It's been a magnificent year for property in terms of growth right around the country. We've seen all parts of Australia properties grow, and Australians totally focus back on that principal place of residence. And as a result, it's become the topic of conversation. That's translated into anywhere from 20 up to 50% growth over a period of 1 year. So I haven't seen that sort of growth ever. So it's truly quite remarkable. As a result of that, there's lots of confidence in the market, lots of energy in the market, and in the Sydney market, an average growth of 22%. When you go closer to those coastal areas and right on the waterfront for those prime coastal properties, I've seen properties increase by 40 and 50%. Literally.
That's significant.
Blowing.
And we're talking to a guy here who spent 40 years in the market, with a, if you like, an encyclopedic knowledge of the trade, the transaction, the movement in most streets, certainly across the eastern seaboard here, or the eastern beaches here in Sydney. But that knowledge extends out into other cities, as we're discussing. And I'm sure, and I think we've spoken about this, that if you're looking at the professionals in the market today, you'd be the first to say that you know most of them.
Absolutely. We've got a great relationship with our peers. We pride ourselves on that. We're all professionals. We're all very competitive. It's a competitive space, but you need to have good relations with people in any business you're in. But what's really apparent is that Australians have really spoken with their wallets. And when you see an original property on a south-facing headland in Tamarama sell for just under $30 million,
you know you're in the market.
You know that this part of the eastern beaches of Sydney are on the map as probably one of the best places in the world to invest property.
And let's follow on from that. So globally, what we're seeing generally in property, I mean, Asia Pacific commercial property market just on screen, the pundits and Bloomberg say it's stabilising. Is it?
I'd say so. I'd say it is, and I'd say we're in 2022. We're looking for a lot of stability. I think the buyers are going to get a bit of retribution if they've been patient. We can't sustain that sort of growth. It's not affordable, and as Peter
Not at free money.
No, and as Peter said, the inflation story will kick in, and we've got an election next year, so that really does take people's mind off property. So I see from May through till September a real flat lining of the market, and recovery, September, but I can't see that sort of growth.
All right, let's spend 2 minutes talking about the signals that matter in property. Pete and I talk about the signals that matter in trade, and we look for them. What are the buying signals? What are the selling signals? How should we be preparing for the first, say, quarter of next year?
Well, the signals are interest rates and long-term interest rates. If you're a buyer, you're looking at those interest rates, and long-term rates have gone up. So you're in a market where money is going to go up. So are we reaching the peak of the market? I think so, in terms of price point. So if you're a buyer, you wouldn't be rushing in that quick, but you need to be proactive. You definitely need to be proactive. In terms of product on market, there is definitely a lot of product coming on the market early next year, and people have identified that February, March is that last time to get out before the election. A change of government definitely has an effect on the property market, and there are no guarantees at any election. So up until Easter, you're going to see a heavy trading period, and then after Easter, you'll see a much quieter period until after winter. And a lot of Australians will travel overseas next year, and that will definitely affect the market because they'll be able to travel.
Ability to travel, less money, and obviously that's a signal, less money floating around the Australian market, people starting to move again, spend the money offshore. Pete, how does that play into your thinking? Does that sort of line up with some of the inflation stories we see around the country, around the world? Does that talk to you about, does it give you any sense that it'll shift any of your signals in your space?
I don't necessarily think so, Will. I think it's what the big picture thought is, as far as Australia, are we going to see rate rises, and how aggressive is our central bank going to be compared to the likes of the US? So there's the first part. Secondly, do they get inflation under control? As Glenn mentioned, we've got an election. You've got an election next year in France. You've got an election midterms in the US. So that really creates a lot of uncertainty, which is, again, takes a little bit of, as far as a sentiment mindset, changes the perception from long-term traders. So short-term traders look at, well, what does that opportunity represent? That's why I think it'll be a volatile year.
A volatile year, some certainty in property, but yet you still really do need to step back and start planning the year if you're coming through it from a buy or a sell perspective. From
both perspectives, you need to be organised. If you're a seller, you need to be planning now, and if you're a buyer, you need to be all over the market. We've traded a lot of property in December, more so than any time in history. So that tells me that buyers are still out in force because they see value, and the sellers are still confident to put their properties on the market in December because we're on the back of a massive surge in price, and they're still feeling confident that they're happy to sell at that price point.
Competitive landscape, competitive marketplace, how do you stay ahead, Glenn?
You just got to be thinking. You have to be ahead in all parts of your business. So in terms of your marketing, in terms of your people management, in terms of your results and getting those results out into the marketplace and ensuring that people feel confident that you're achieving the best results. And once they believe that, well, the market will feel confident that you're the best person. And in our business, it's all about getting the best properties, because if you get the best properties, you get the best audience.
Ladies and gentlemen, there's the signal that matter. There's the baseline information. There's the trading information in commercial, not only residential real estate, but perhaps even leading into some of the commercial opportunities. Pete, it's been a big year.
Glenn, been a good year.
It's always fun to talk property with you. I don't think there's anyone better with the depth of knowledge straight off the cuff to bring in and have a chat with.
Well, when you live it and breathe it for a couple of generations, and you still got your kids coming in, every time we have a family dinner, we talk real estate because the kids are in real estate. My mother's in real estate, my brother's in the whole family. You can't help it. It becomes a bit addictive, but it's a good addiction to have.
Now, who dresses up as Santa in your family?
Definitely Martin. He's a gun sales agent in the company, but he more represents Santa Claus because he's got his nice little, comfortable belly there.
Martin, the gift that keeps giving.
Yeah, he is a gift that keeps giving. But no, Marty will be dressing up. It'll be a good... my mum just released her memoirs today, which was a 95-year tribute to her, so we're a bit excited to get it in print, and we'll be celebrating over the Christmas period with her for that effort.
Signed copies in the Santa sacks.
Absolutely, definitely.
Well, ladies and gentlemen, there's the show. That's the wrap, and look forward to joining you all back in the studio from January next year. Thank you.
Thanks, Will.
Thank you, Will.